Good afternoon, this is Ernest Moosa and this is the Naked Truth. Today, September 6, 2013, the Bureau of Labor Statistics released their information on the jobs number for August 2013. The jobs number came in at 169,000 below estimates. They also revised sharply June and July of 2013, lowering June to 172,000 and July to 104,000. This puts us at a point where over the last 12 months we've generated an increase of 1.65% in new jobs over the last 12 months. That is down from a rate of job production through August 2012 of 1.69%. So despite the evidence that jobs are slowing, we continue to hear in the reports that the economy is improving. These are just blatantly false. In addition, the quality of these jobs that are being created continue to weaken severely. Most of these are low-paying, part-time, service sector jobs, which after the effects of Obamacare, which is curtailing hours below 30, and the number of part-time workers in a company below 50 so as to avoid the effects of Obamacare. These jobs offer no career paths and no job growth opportunities going forward. Over the last 12 months, job growth has been rather consistent, meaning that it's been consistently poor from my perspective. Over the last 9 months for this year, we've averaged 180,000 new jobs created, which is down sharply from 2012, where we averaged 205,000 jobs per month for the calendar year. So we're 25,000 jobs per month below the rate of creation in 2013 that we had in 2012. And if you were to take out the month of February, which seems to be quite the aberration, of 332,000 jobs created in the shortest month of the year, we would have the ability to get a better picture of what's really going on economically. The other problem we have is that corporate profits continue to decline year over year. For the last 4 quarters, quarterly profits are now at, let me find my number, 3.99%, meaning that corporations, which include sole proprietors, small to medium-sized businesses, as well as the largest companies, Microsoft, Google, IBM, etc., the profits year over year have increased 3.99% for the year. A year ago, for the same time frame, we were at 8.19%, meaning that 5% of the profit growth has been squeezed out of the equation for these businesses. My theory is that once the numbers fall below 7%, employment takes a hit, employment growth. And we have been well below that threshold now for the last 3 quarters. Why are the employment numbers still positive when I forecast that the employment numbers would have turned negative? I have to give the credit to that to the Federal Reserve, who have been injecting $85 billion a quarter, or $255 billion, $85 billion per month, or $255 billion per quarter in artificial profits. The reason I call these artificial profits is because if the private sector had to be buying these mortgage-backed securities in the U.S. Treasuries instead of the Federal Reserve, the only place on the balance sheet for these dollars to come from to do so would be out of the profits or the bottom line. So these are, in effect, artificial profits that then allow the real profits that corporations have made earned to be spent elsewhere. And that is artificially supporting this economy. The irony is that the labor force participation rate has dropped to such a low, it's driving the unemployment rate number down, which is closing in on the Federal Reserve's arbitrary red line in the sand that says when we get to this number, we will begin taper. The problem is the taper is in effect causing the numbers to drop. And as soon as the taper stops, unemployment numbers are going to begin to rise even more rapidly, providing them a conflict Do they begin to taper immediately and suddenly again injecting more cash into the economy, or do they recognize the problem for what it is, that we have more underlying fundamental problems besides whether or not money is available? The other thing I'd like to talk to you about right now is the profits of certain individual companies. We have been hearing headlines after headlines about companies beating the expectations on the earnings front and companies having record high levels of earnings per share. One or two examples of this would be Home Depot and Lowe's. Home Depot and Lowe's earnings per shares have continued to rise sharply over the last 3 or 4 years. What's not discussed is that Home Depot and Lowe's have both just about tripled their total debt, meaning that they owe more than 3 times what they did 5 or 6 years ago to bondholders and to banks whom they've borrowed the money from. What have they done with this money? Well, in a normal business expansion, companies would get these funds and expand their businesses, go into new ventures, buy competitors, all sorts of things. In today's economic environment, companies buy back their own shares, therefore increasing the earnings per share, even though the bottom line profit dollars that these companies have earned has now fallen or not even close to their record highs. Both Home Depot and Lowe's combined are earning approximately $2.3 billion less per year than they did at their economic peaks back in the mid-2005-2006 time frame. So Home Depot and Lowe's are both heavily dependent upon the housing cycle, and we have been told that the housing cycle has been rebounding, that the housing sector is going to carry us forward. But the numbers just do not stand up under scrutiny. The earnings per share for companies in these sectors, yes. The earnings total dollar amount making it to the bottom line, no. So it's very difficult to foresee Home Depot or Lowe's really going out and expanding their organizations when they're making much less profit than they did 7, 8 years ago, and they now have 3 times the debt they once had, which will have to be repaid out of those profits sooner or later. So that's just an example of 2 companies. There are many other companies that have been buying back tons of shares of stock. As I perused the value line today and was looking at how the share counts have fallen, it's pretty disturbing. Companies have basically taken advantage, which I cannot blame them, for the very ultra cheap money that the Federal Reserve has made available, but at the same time it's causing us to fool ourselves, to give us this false sense of prosperity, because for instance Home Depot is in the Dow 30, and that causes when the Home Depot price earnings per share goes up, it looks like they're doing really well. Investors that are buying shares of Home Depot bid the price up even higher, and that inflates the Dow Jones Industrial Average, which has this perception that everything is rosy and good. The truth is not so clear. There are many U.S. companies that are struggling. They're even struggling just to make it month to month and year to year, and let alone try to expand and hire more folks, which is exactly what we need. And when you combine that with the higher regulations that we're facing, in addition to Obamacare, which is being pushed onto all Americans at an extremely high price without any benefit whatsoever that people can recognize, we're in for a world of hurt. Couple that with gasoline at $3.75 and rising, and we have a lot of issues for the American consumer to overcome. The American consumer was supposed to feel very good about rising home prices and about the rising stock market, and then open up their purses and spend more money in the retail sector. But consumption is not increasing. August consumption rose 0.1%, and 0.1% is not going to be enough to drive the economy where the Fed would like it to go. So we have a lot of issues facing us. I am forecasting another poor jobs report for the month of September. I'm expecting less than 100,000 jobs to be added, and I know that the experts are going to say we're going to bounce back, but the truth is there is no singular reason why we should expect a sudden bounce back in hiring with all of the unknowns going forward. It just doesn't make rational sense for a business to try to start adding headcount and taking on those expenses when the best course is just to tighten the belts and watch the bottom line and make sure that you're going to be able to survive the next economic downturn. Well, that's all I have for today. This is Ernest Moosa with The Naked Truth, and I hope that I have made a little bit of sense to you today, and I hope you recognize that the economy is not what it's supposed to be, and that we have a lot of work ahead of us if we're ever going to get this thing turned around and get the American economy back where it's supposed to be, and that's in a growth mode, profitable for all of us, and beneficial to all of us.